The S&P 500 came in today overbought and clearly near resistance from the July highs in front of the CPI report. And so not the best trading setup, so to speak, from that angle, but this is actually the fourth time that the S&P has been overbought in front of a CPI report. And in all three of the prior times, it was higher 2 weeks later. And so we saw that in June after the initial pullback bounce. In July, 2 weeks later, still higher before the top was in. And of course, after the last spike from November 14th, just has continued higher from there. So 2 weeks from now, of course, will put us right near the end of the year. And those final 2 weeks of December typically have bullish implications. And so in terms of, what it's been like from a trading environment since the last CPI report, we know trending higher with really very little movement from a daily perspective, right? Small moves up and down. And so the last time, of course, we had that 1% advance was November 14th. The last 1% decline back on October 26th, the day right before the low. So that's typically what happens after you get a huge kickstart of momentum, subsides a bit. And best case scenario is that it just continues higher on a more consistent basis, which of course is what we've had. And so we can see this from a day by day perspective here, looking at the last 20 trading days of action, where 8 of the last 9 days have had positive internals here, right? Including yesterday, which was the best day since December 1st. So nothing really stands out here. And that's really the point. Again, this is the last 1% advance, it's the last CPI day. And from that point, even though we had a 5-day winning streak here, it's been back and forth, but with an upward bias. And again, we see this by the positive breadth. We see this by the ability of the S&P to close above its mid-range most of the time, even on down days, right? That's typically, again, what we want to see after a big spike to start this type of rally. And so this has helped, of course, the breakout that we saw from a few days before November 14th extend higher. And it looks pretty simple from this perspective, but remember, we're looking for a similar thing to happen numerous times on the way down, where the initial breakout attempts here and here failed, and then, of course, new lows happened. And so we talk about this all the time, but what helps breakouts work is when you have the market extend higher without revisiting the breakout zone, which means typically have fewer whipsaws, and that means that the moves overall are smaller. And that's all working right now with lower two-way volatility, helping all different patterns and breakouts like this. Now, it's also interesting to, again, compare what we've had here to what happened at the beginning of the year, or at least from the March lows, where it wasn't right away, but we finally got that breakout in May, and obviously very strong in June. And things eventually slowed down a bit, and we just had that slower extension higher up into July when things finally rolled over. Now, much quicker this time, but very similar behavior, where we had the breakout, extended higher, and again now testing the highs for the year. Now, we have to go back to last year and think about what happened in December, because as you recall, we're up pretty well from the October low and chugging along here. But then we got to that week where we had CPI and FOMC decision on back-to-back days. Okay reaction to CPI, but close on the lows. And then, of course, the negative reaction to the Fed's meeting, which really took us to the end of the year in a downward fashion. Now, again, compared to what we've had right now, stronger, but similar thing, where we had the low in October, an extension higher into December here, where potential for to see what the Fed says, of course, tomorrow, which could maybe take the air out of this balloon a little bit. We'll have to wait and see, right? Now, again, thinking about where we are at the very top of the range and overbought. Now, we've been overbought now, or close to it, for about a month, right? Ever since this rally from the CPI from November 14th. I've seen the market extend higher after that as well. But again, getting to the top of the range, holding this, of course, would be great. But thinking that we could have a greater pullback, probably not too far from what could happen. And one of the things to look at here is considering all angles, right? There's nothing to suggest from a price action perspective, as we just saw from that table before, that anything has changed just yet, right? This moves have been small, haven't had big down days, and the market continues to close near its highs. If that changes, we could see potentially a retracement bigger than what we've had, because over the course of a number of days, the pullbacks have only been not even 1.5%, right? Those have been the biggest retracements. And we know that that has to change at some point. So if it does soon, if the market doesn't like what the Fed has to say tomorrow, then something like this could occur, where 38.2 retracement would get us back down to around 44.25. Now that would take us below the gap, right, from November 14th and put us very close to where it closed the day before, which is around 44.20. But it would also keep us above the breakout from the pattern we showed a few slides ago, which was right around 43.90, right? And so that would keep the bullish breakout intact. That would satisfy the condition of another higher low, which could set the stage for a different kind of bullish pattern, right? These are all what ifs. But in terms of what you want to see as a scenario for this to continue into the early months of 2024, whenever the next pullback occurs, that's what you want to see, of course, which would be much different than what we had here, where all of those continued to fail. So we'll be looking at that over the next few weeks, of course. We'll be in touch along the way. Check out these other videos and subscribe. And I'll talk to you next time. Thank you.